Ladies and gentlemen, imagine waking up on January 1, 2025, and discovering that everything you thought secure in your retirement, your income, your benefits, even your healthcare costs, is no longer what you planned for. The ground has shifted beneath your feet, because as night follows day, massive changes are coming. Tax laws are being rewritten, pensions are being restructured, health care subsidies reevaluated. If you don't act today, you may wake up tomorrow too late. That's why this may be the last financial advice you ever heed before 2025 changes everything for seniors everywhere. If you listen closely, act boldly, you can not only survive, but thrive through the upcoming upheaval. You can feel it if you're paying attention. The clock is ticking, and the rules of the financial game are about to be rewritten. What worked for the last 10 years will not work the same way in the next 10. Too many people are living with the illusion that the system is frozen in time, that the laws, the policies, the regulations that protect their income and their savings are carved in stone. That is a dangerous assumption. The truth is this: governments adapt when pressure mounts, economies shift when debts rise, and regulators rewrite the playbook when they feel the weight of imbalance. The years ahead are already signaling something big, and 2025 is shaping up to be the reset point. If you're a senior or nearing retirement, you cannot afford to dismiss what's coming. Policy changes aren't abstract lines in a newspaper. They are the hands that can either hold up your income or pull it down. Tax codes are not permanent. They bend when deficits swell. Pensions aren't guaranteed. They adjust when governments face mounting obligations. Subsidies and benefits that once seemed untouchable can be reviewed, restructured, even reduced when new leaders and new agendas take the stage. And make no mistake, new agendas are coming. What does this mean in practical terms? It means that every dollar, every rupee, every pound you thought was safe in the current system could be treated differently under new rules. Maybe tax thresholds get lowered. Maybe pension contributions are taxed higher. Maybe healthcare subsidies shift from broad coverage to means tested models. Each of these decisions is made in boardrooms and parliament floors far from your kitchen table, but their impact lands directly on your bank account. If you don't prepare, you will be left scrambling when the announcement goes public, and everyone else is rushing to adapt at the same time. You have to think like a strategist. This is not about fear. It is about anticipation. It's about recognizing that regulatory shifts are not random shocks. They are signals of a system under pressure. Look at the national debt levels. Look at the aging population. Look at the strain on healthcare programs. These aren't just statistics. They are precursors to change. When costs rise faster than revenues, governments react. They always do, and when they react, the adjustments fall on those who can least afford to scramble: retirees, savers, and those living on fixed incomes. The wise don't wait for the press conference. The wise act before the headline breaks. That means paying attention to the policies being debated right now. The proposals floating around committees today become the rules you'll live under tomorrow. Don't ignore them just because they're buried in long reports or wrapped in technical language. Decode them, or pay someone to decode them for you. Understand what a 1% shift in pension tax means for your annual income. Understand what a change in healthcare subsidy eligibility could cost you each year. Multiply those numbers over 10 years, and suddenly the picture becomes clear. Small regulatory tweaks can become life-changing events when you live on a fixed stream. Here's the brutal reality: policy shifts rarely make people richer. At best, they redistribute. At worst, they erode. If you want to be on the right side of that equation, you need to be proactive, not reactive. If a tax benefit is being phased out, claim it now before it disappears. If a pension contribution match is changing, maximize it before the adjustment kicks in. If estate rules are being restructured, get your will and trust documents aligned with the current framework before new fees and limits take effect. The window of opportunity is always before the door slams shut. I want you to think about how many people were caught off guard in the past. When retirement ages were raised, thousands woke up realizing they had to work longer. When healthcare premiums spiked, people scrambled to rearrange their budgets. When inheritance laws shifted, families lost wealth they assumed would pass down smoothly. Every one of those shocks had warning signs. Every one of them could have been mitigated by paying attention earlier. Don't be the one saying, "I didn't see it coming." Be the one who says, "I saw the shift and I was ready." Now, let's go even deeper. Policy isn't just about money, it's about control. The way rules are written defines how free you are to allocate your wealth, transfer it, or enjoy it. If restrictions tighten, your flexibility shrinks. If they loosen, opportunities expand. Anticipating changes is about more than protecting income, it's about protecting freedom. The freedom to choose how you live, how you support your family, how you spend your last decades with dignity and security. That freedom depends on foresight today. So what is the move? The move is vigilance. Read beyond the headlines, follow the debates that others ignore. Ask your financial advisor not just what's the plan, but what's the plan if the rules change. Build contingencies, build flexibility, build the ability to pivot. Because the people who thrive through shifts are never the ones surprised by them. They are the ones who already built the bridge before the river changed course. The changes ahead are not designed with your personal interests at heart. They're designed to balance the books of nations, to correct structural imbalances, to satisfy political agendas. You have to look out for yourself. Nobody is going to knock on your door and say, "Here's how you protect your pension," or "Here's how you secure your savings." That responsibility is yours and yours alone. The question is not whether the rules will change in 2025. The question is whether you will still be standing strong when they do. Those who prepare will absorb the shift and keep moving forward. Those who ignore it will feel the ground collapse beneath them. This is your wake-up call. Don't wait for permission. Don't wait for confirmation. Anticipate the change, prepare for it, and when the wave comes, you won't just stay afloat, you'll ride it. Money has only one real job, to give you choices, but the moment you lose control over your savings and your income streams, those choices vanish. You don't get to dictate how you live, where you live, or even how long you can live comfortably. That's why protection matters more than accumulation at this stage of life. You've already played the accumulation game. Now you're in the preservation game. And here's the hard truth. Most people don't realize that protecting what they have is more powerful than chasing what they don't. Think about it. One market downturn can wipe out years of effort. One policy shift can slice a portion of your income. One health crisis can drain savings you thought were untouchable. People walk around acting as though the systems that pay them, the accounts they hold, the pensions they draw from are invincible. They're not. Everything has risk attached to it. The smart ones recognize those risks and build armor around their income stream. The rest they learn the hard way. The first step in protection is clarity. You need to know exactly where every dollar of your income is coming from. Fixed pensions, social security, dividends, rental income, interest accounts. Map it all. Most people think they know, but when you ask them to break it down to the exact figure, they fumble. That's weakness. You can't protect what you can't measure. Once you map it, ask yourself the real question: which of these streams could be disrupted tomorrow? Which ones are vulnerable to inflation, regulation, or market volatility? That's where the cracks are. Next comes diversification. Relying on one or two sources of income is like standing on one leg. It works until it doesn't. You need multiple legs holding you up. If one stream slows, another carries the load. Maybe that means balancing between fixed pensions and market-based returns. Maybe it means supplementing with a side income, rental property, or a small business venture designed to generate cash flow. Too many seniors think I'm done earning. That's not protection. That's surrender. You don't have to grind like you did in your 30s, but you can design light, controlled income streams that add resilience to your financial base. Inflation is the silent thief that erodes protection without you even noticing. If your income doesn't outpace inflation, you're moving backward every single year. That's why locking all your savings into fixed accounts with low returns is dangerous. Yes, they're safe, but safety that loses purchasing power is not safety. It's decline disguised as security. Protection means striking the balance. Some assets locked for stability, others positioned for growth. Growth isn't about chasing the latest hot stock. It's about choosing instruments that historically weather inflation better than cash sitting idle. Liquidity is another key. What good is a strong account if you can't access it when you need it? Emergencies don't wait for maturity dates. Protection means having money that can be reached fast, without penalties, without red tape, without market timing. Too many people put everything into illiquid investments, thinking they're being smart, only to discover that when a crisis hits, they can't touch their money without losing a chunk of it. That's not protection. That's a trap. Keep part of your wealth liquid, ready to deploy at a moment's notice. Now let's talk about expenses, because protecting income is not just about earning, it's about keeping. A dollar saved is a dollar earned, and unnecessary leaks destroy protection. Audit your expenses the way a CEO audits a company. Where are the hidden fees? Which insurances are overpriced? Which subscriptions are draining money without adding value? Tightening the belt in smart places is not about sacrifice. It's about strengthening the walls around your income. Every expense cut gives your existing savings more room to breathe. Taxes are another silent enemy. Governments change the rules, but even under current rules, most people are bleeding money to taxes they don't have to pay. Are you structuring your withdrawals in the most tax-efficient way? Are you using accounts that give you deductions or deferments? Are you timing income in a way that keeps you in the lowest possible bracket? Protecting income means protecting it from being eroded before it even reaches your pocket. Don't just pay taxes, manage them, and then there's the health factor. One medical emergency can burn through savings faster than any market crash. Protection here means insurance, planning, and realistic preparation. Too many people gamble on "I'll be fine." That's not strategy, that's denial. Get the coverage that shields your savings from being gutted by medical bills. Build an emergency health fund separate from your living expenses. It's not pessimism, it's protection. Finally, protection is about mindset. If you think protection equals fear, you've already lost. Protection is strength. It's the posture of someone who refuses to be blindsided. The mindset shift is this: don't wait for trouble to come knocking. Assume it's already walking up the driveway. Build your walls now, reinforce your gates now, and when the storm hits, you'll be watching from a position of strength while others scramble. Your savings are not just numbers on a page. They're years of sweat, sacrifice, and trade-offs. Your income streams are not just checks. They are the lifelines that sustain your dignity and independence. To protect them is not optional, it's the mission. The people who win are not those who made the most during the boom, but those who protected the most during the shift. You've worked too hard to let careless planning or blind trust undo it all. Build your defenses today. Protect your streams now, because when the tides rise in 2025 and beyond, protection won't just keep you afloat. It will keep you unshaken, standing firm while the world scrambles. If you want to play this next phase of life with power, you can't just think about making more. You have to think about keeping more, and that's where the real game is won or lost. Too many people leave money sitting on the table, money that should be in their accounts, money that belongs to them, money that could be the difference between a stressed out retirement and a secure one. At the same time, they're bleeding cash through hidden costs they don't even see. It's like filling a bucket with water while ignoring the holes at the bottom. The faster you pour, the faster you lose. That's not strategy, that's waste. The sharp ones know better. They don't just earn, they capture. They don't just save, they extract every benefit available to them and plug every leak draining their wealth. Let's start with benefits. Most people don't understand how many programs, subsidies, and entitlements are available. They assume what's deposited into their account each month is the maximum. That assumption costs them thousands over the years. The truth is, governments, insurance providers, pension programs, and even local institutions are full of overlooked benefits, discounts, credits, additional support, tax deductions that go unclaimed because people don't take the time to research. It's not about handouts, it's about optimization. You've paid into these systems your entire life. If you don't claim everything you're entitled to, you're leaving your own money behind. Imagine going through your paperwork and discovering you qualify for a health care subsidy you never applied for, or a senior tax credit you overlooked, or an energy bill rebate you never claimed. That's not hypothetical. It happens every single day. The problem is, most people either don't know these benefits exist or they assume the process to get them is too complicated. That's where the disciplined ones separate themselves from the average. They invest the time to uncover what's available. They call, they ask, they push through the paperwork. They don't leave anything on the table. Every dollar that flows in from those benefits is a dollar that strengthens their position without requiring them to lift a finger in the market or take on more risk. But here's the other side, the leaks. And this is where most people sabotage themselves without even realizing it. Hidden costs are everywhere. Bank fees, investment management fees, insurance premiums that are overpriced, loan interest you shouldn't still be paying, subscriptions you don't even use. It's financial death by 1,000 cuts. You don't notice one small fee, but compounded over a year, over 5 years, over 10 years, that's real money that could have been building your cushion instead of vanishing. Ask yourself this: when was the last time you actually combed through your bank statements line by line? Most people haven't, and that's why they're paying for services they don't use, fees they didn't agree to, and interest charges that could have been negotiated or eliminated. Protecting wealth isn't glamorous work, it's detective work. It's noticing that your pension fund is charging management fees you could cut in half by switching providers. It's realizing your insurance policy has coverage you don't need but you're still paying for. It's cutting the excess that does nothing for you but everything for the company charging you. The mindset shift here is critical. You have to see every dollar you lose unnecessarily as an enemy. Every wasted fee, every unclaimed benefit, every avoidable expense is money that could have been compounding for you, serving your family, buying you freedom. The wealthy know this. They track every leak and plug it fast. They don't see it as being cheap. They see it as being efficient. Efficiency is power. Efficiency is control. And don't underestimate the compounding effect of plugging leaks and maximizing benefits. Finding an extra few $100s a month through smarter choices may not feel world-changing in the moment, but stretched across a year, that's thousands. Across a decade, that's tens of thousands. And when markets get tight or policy shifts hit, that extra buffer could be the line between confidence and panic. Small gains add up. Small leaks add up, and the person who manages both wins. Now, some people will argue, I don't have the time to chase every little saving. That's not the point. The point is not chasing pennies. It's identifying the systemic leaks that drain thousands quietly over years. It's taking the time once to restructure, renegotiate, or realign, so you save automatically from that moment forward. That's leverage. That's the CEO mindset. Put in the effort up front, build the system, then let it run while you focus on the bigger picture. This also isn't just about money, it's about psychology. Every time you reclaim a benefit, every time you cut a hidden cost, you reinforce the belief that you are in control. You stop feeling like a passive player waiting for the system to treat you fairly. You become the active force that bends the system to work in your favor. That shift in mindset gives you the confidence to keep digging, keep optimizing, keep strengthening your financial base. And let's be clear, this is not optional if you want to thrive through the changes ahead. Costs are rising, benefits are tightening, taxes are shifting, inflation is eating away silently. The only way to stand strong is to build efficiency into every corner of your financial life. Claim what you're owed. Eliminate what you don't need. Protect what you already have. That's how you maximize the impact of the resources available to you. So the question is simple. Are you the type of person who shrugs and says, it's just a few dollars? Or are you the type of person who sees those dollars as building blocks of security and power? One mindset leads to waste, the other to freedom. The system is full of cracks, but it's also full of opportunities. The winners are the ones who see both and play the game with precision, maximize the benefits, cut the hidden costs, stop letting money slip through your fingers. Because when the storm of 2025 rolls in, those who optimized will be ready, and those who didn't will be left wondering why they can't keep up. There comes a point when the goal of investing is no longer about chasing every percentage point of return. It's about striking the perfect balance between protecting what you've built and letting it continue to grow. That balance is where security meets opportunity. Without it, you're either stuck clinging to safety while inflation eats you alive, or you're gambling on growth that could collapse just when you need stability the most. Both extremes are dangerous, but the person who finds the middle ground wins the long game. The problem is that most people invest like they're still 25 when they're 65. They chase big returns as if time is still on their side. But time changes the rules. When you're young, you can recover from losses because you've got decades ahead. When you're older, a major downturn can take years you don't have to rebuild. On the flip side, going too far in the other direction, stuffing everything into low, yield safe accounts, feels secure until you realize your money is shrinking in real terms. Prices rise, healthcare costs explode, and suddenly that safe nest egg doesn't buy what you thought it would. That's why balance is not just a good idea. It's the only strategy that works. So how do you adjust? First, look at your risk exposure. Too much tied up in volatile stocks or speculative assets. That's a red flag. You need to rebalance into assets that can weather storms without leaving you empty-handed. Think bonds, dividend, paying stocks, real estate that produces steady rental income. These are the kinds of assets that generate cash flow and stability. They don't swing wildly every week, and they keep paying even when the market throws a tantrum. You want your portfolio to be the financial equivalent of a house built on rock, not sand. At the same time, don't misunderstand. Safety without growth is not safety at all. Inflation is relentless. Every year your money sits idle in low yield accounts. It's quietly losing purchasing power. That's why you need calculated exposure to growth assets, the kind that keep you ahead of rising costs. This isn't about chasing risky bets. It's about strategic positioning, large cap companies with a history of resilience. Index funds that spread risk across entire economies, growth balanced with discipline. The right kind of growth doesn't feel like a gamble. It feels like a hedge against the erosion of time. Liquidity matters too. Imagine holding assets that look valuable on paper but can't be touched without a massive penalty or a market crash slicing them in half. That's not wealth, it's a trap. You need a portion of your portfolio that's liquid, accessible, ready to deploy. Emergencies don't wait, and neither should your money. Safety is not just about where your money sits. It's about how quickly you can use it when life calls your bluff. Another element most people ignore is sequencing risk. Picture retiring at the peak of the market, drawing down your assets just as stocks take a nosedive. You're pulling out money while the account is shrinking, and suddenly the math works against you. Protecting against that means keeping a buffer of stable assets, cash, short-term bonds, or near cash equivalents that you can draw on in bad years instead of selling growth assets at the wrong time. That buffer buys you time. Time for markets to recover. Time for your growth positions to do their job without being liquidated in a panic. And let's be honest, emotions kill balance faster than markets do. Greed makes people overweight in risky assets when things are good. Fear makes them run into low return safe havens when things look bad. Both reactions destroy the plan. You need discipline. Discipline means rebalancing regularly, selling a little of what's grown too fast, adding to what's underweight, keeping your mix aligned with your actual goals instead of the headlines of the week. Discipline doesn't feel exciting, but it's what keeps the ship steady while others capsize. Don't underestimate diversification either. Balance isn't just about stocks versus bonds. It's about spreading across geographies, sectors, and asset classes. If your entire portfolio depends on the economy of one country, one currency, or one industry, you're fragile. True safety comes from knowing that even if one part of the world struggles, another part can carry you. That's balance at scale. Legacy is also a factor. The way you balance your investments doesn't just impact you. It impacts your family, your heirs, and the causes you want to support. If your portfolio collapses because you overloaded on risky bets, your loved ones inherit problems instead of security. If you bury all your wealth in low-yield instruments, you leave behind less than you could have. Balance ensures you're not just living well now, but also leaving a foundation for those who come after. And here's the most important piece you have to adapt. Balance is not static. The right mix today is not the right mix 5 years from now. Your health changes, your income needs shift, the global economy evolves. You can't set it and forget it. You revisit, you reassess, you readjust. The ones who thrive treat their portfolio like a living system, not a museum piece. The world is moving into a period of volatility policy shifts, rising debt, unpredictable markets. This is not the time to gamble, but it's also not the time to hide in fear. The winners will be those who plant one foot on safety and the other on growth, standing strong on both. That balance is what keeps your lifestyle secure, your wealth intact, and your future open. Don't let anyone sell you on extremes. Build the middle ground. That's where real power lies. At some point, the conversation about money stops being just about you. It becomes about the people who will carry your name, your work, and your values when you're gone. Too many people wait until the end to think about legacy, and by then, it's too late. The truth is, if you don't plan your legacy, the system will plan it for you, and that's the worst deal you can make. Courts, governments, and tax agencies don't care about your intentions. They care about rules. And unless you take control, those rules will decide what happens to everything you've built. That's not leadership. That's negligence. Legacy is not only about wealth, it's about impact. It's about making sure that your children, your grandchildren, your family, and even the community you leave behind are better off because you lived, not worse off because you failed to prepare. The money is a tool, but the legacy is the story. And if you've spent a lifetime working, saving, investing, then the least you owe yourself and those you love is to make sure that work doesn't dissolve into confusion, conflict, or unnecessary loss when you're not here to defend it. The starting point is clarity. Who do you want to benefit? What values do you want to pass down? How do you want your wealth to be used? These aren't casual questions. They're the blueprint for everything that follows. If you don't write them down, if you don't lock them into place legally and financially, then your wishes become irrelevant the moment you're gone. And let's be clear, vague conversations around the dinner table are not a plan. A plan is a will. A plan is a trust. A plan is a power of attorney. A plan is binding documents that make sure your voice carries weight even when you can't speak. Taxes and regulations will come after your estate, whether you like it or not. If you haven't structured things properly, you could see large portions of your wealth eaten up before your family even touches it. That's why smart people put estate plans in place, not because they love paperwork, but because they know the system is designed to take what it can unless you build a shield. That shield could mean creating trusts to protect assets. It could mean transferring wealth in stages while you're still alive. It could mean setting up insurance policies designed to cover estate taxes, so your heirs don't have to sell assets just to pay the bill. Legacy planning is not optional, it's strategy, but legacy isn't just about protecting against loss. It's about maximizing impact. Imagine structuring your assets so your children don't just receive money, but receive it in a way that teaches them discipline, responsibility, and stewardship. Maybe the funds they inherit are tied to conditions, education, entrepreneurship, responsible use. Maybe you choose to set aside money for causes that matter to you, turning your values into action long after you're gone. This isn't control, it's guidance. It's leadership that outlives you, and don't ignore the emotional side. Families have been torn apart because someone didn't take the time to create a clear plan. Siblings who once loved each other fight over property, businesses, or bank accounts because nothing was written down. The pain of losing a loved one becomes multiplied by confusion, resentment, and legal battles. That's not the memory you want to leave behind. Legacy planning eliminates that chaos. It creates clarity, it eliminates guesswork. It leaves your family free to grieve and move forward, not battle over scraps of interpretation. Some people resist planning because they think, I don't have enough to worry about. That's wrong. Legacy isn't only for the ultra-wealthy. Even modest estates can be eaten up quickly by poor planning. And the truth is, your family doesn't measure your wealth in dollars. They measure it in meaning. Whether you leave them a business, a property, a savings account, or just the assurance that everything was handled properly, the impact is profound. It says, I cared enough to prepare. That message is priceless. It's also about timing. Legacy planning isn't something you do at the very end. You start now, you review regularly, and you adjust as life changes. Children grow, circumstances shift, laws evolve. A plan made 10 years ago may no longer serve your goals today. You can't afford to set it and forget it. Just as you rebalance investments, you rebalance your legacy strategy. That's how you stay in control even as the world changes around you. And finally, legacy is about responsibility. You've carried the weight of building a life, creating income, raising a family, making sacrifices. That responsibility doesn't disappear when you retire, it evolves. Now it's about securing the future for those who depend on you directly or indirectly, and make no mistake, people are watching. Your children are watching how you handle the end game. They're learning from you whether you realize it or not. If you show them discipline, clarity, foresight, they will carry that into their own lives. If you show them carelessness and avoidance, they'll carry that too. Your legacy isn't just in what you leave, it's in what you teach by example. So ask yourself, what story do you want told after you're gone? That you left confusion and conflict, or that you left clarity and security? That you let the system take control, or that you stayed in control until the very end? Legacy planning is leadership in its purest form. It's not about death, it's about continuity. It's about ensuring that the values you lived by, the wealth you built, the family you loved, continue forward with strength instead of being weakened by neglect. The final move is this: stop postponing. Don't wait until next year. Don't wait until someday. The time to plan is now. Put the documents in place. Review the strategy. Have the conversations. Take the uncomfortable steps. Because when your time comes, you won't get another chance to fix it. And when you do it right, the people you love won't just remember you. They'll feel your leadership guiding them long after you're gone. That's a legacy worth leaving. Now, I need you to do something extremely important. Act. Don't let December 2024 slip by thinking, I'll do it next month. Because when the rules change, hindsight is going to sting. Take these steps. Start today. Call your advisor, shift your savings, revise your estate documents. Claim every benefit, cut every unnecessary cost, because this could be your last clear chance, your final window to shape the financial landscape of your retirement before 2025 changes everything. Do the work now, protect your future, and you won't just survive the changes. You will emerge stronger. Thank you. And may your future be secure, your burdens light, and your legacy lasting.